We got the numbers of HDFC Bank flashing for you on the screen now. So the profitability has come in at 11,950 crore. It's a smidge better than what we were expecting. Our numbers were close to around 11,000 crore. So definitely an improvement. The stock is seeing a bit of an initial sell-off. We'll of course have to wait for more details on that. But that's just the first number hitting for you on the screen, 11,950 as far as the profitability is concerned. Quickly, let me tell you about the gross NPA and other ratios as well. The gross NPA ratio this time around has come in at 1.17, and that compares with 1.12 last quarter. So there's a worsening as far as the gross NPA ratio is concerned. And similarly for net NPA as well, the ratio has come in at 0.3% versus 0.27 last quarter. So sequentially, there's a deterioration when it comes to the asset quality, and perhaps that's the reason we saw a bit of a perk down. But if you look at the numbers of the profitability, they're looking better than expectation. Quarter on quarter, it's pretty much stable, around 11,950 crores, but the street was banking that it's going to be a weaker set. We are working with a number of around 11,000 crore on the bottom line, so that's at least holding out better. The asset quality, I'm guessing also street must have penciled in because this quarter was marred by that merger execution, etc. So there might be a case that the focus was on the merger and not exactly just the asset quality and other details. As far as the net interest earned is concerned, it's coming at around 48,560 thereabouts, and that's just the net income, the interest earned. And again, on a quarter-on-quarter basis, there seems to be an improvement. The operating profit has come in at 18,772 crores, and that's quite a sizable improvement from last year because that's coming at around 22% higher. Just to give you the absolute number of the gross NPAs as well, it's 19,064 crore this quarter as compared to 18,020 that the company reported in the last quarter. So on a sequential basis, there's a worsening when it comes to the gross NPA. Provisioning also has been stable, a smidge higher, so 2,860 crore. There has been an increase of around 7% when it comes to the overall provisioning. So provisioning is on the higher side. The net asset quality is slightly muted. Profitability though is higher, so we'll have to wait to get the net interest income number. That should come up for you very, very shortly because that will really hold the key of how the numbers are finally panning out. We have the NII, which is around 23,599 crores, we understand. So just around 23,600 crores. The poll was around 24,000 crores, so just a 400 crore miss as far as the NII is concerned. So NII is in line. Profitability is slightly higher. The net interest income, as we talked about, is around 23,600 crores. We should get up Harsh as well as our analyst joining us shortly to make sense of these numbers because for now the stock is reacting positively after a bit of a knee-jerk reaction that we saw on the downside. But overall, it looks like it's a mixed set, a bit of a worsening when it comes to the asset quality. But NII has come in line with expectation at 23,600 crores versus the expectation of 24,000 crores. And the profitability is looking better because the actual number is around 11,950 crore. We were working with a number of around 11,000 crores. Let's wait and get the other details, and maybe the guest should join us shortly because the stock is now seeing a bit of a spike. It's 0.7% higher. So from the lowest point of the trading session, we have seen that the stock has recovered quite a bit, and that will be mirrored by the move at the index and the bank index level as well, given that this is a very, very high weightage on both these indices. We have Gurmeet Chadda joining us to talk to us about these numbers. Gurmeet, hi, thank you so much for quickly joining us. Your sense as far as the numbers are concerned, first take, the profitability is quite decent at 11,950 crore. NII in line at 23,600 crores, though there's a slight deterioration when it comes to the asset quality.
I think one word, steady as always, Anisha. We've rarely seen very negative surprises from HDFC since the time we've been tracking. And it's been reasonable. I mean, compared to the way other banks have moved up, Bank Nifty scaled up. The combined entity probably now trades at 14, 15 times, FY25 EPS. I think once the merger goes through, this concern on, ROE getting shrink and NIM compression, high LDR, which is almost at 110% at the time of merger, I think gradually will get addressed. I think the key to watch for bank, in my view, is that two things. How can they ramp up the liability growth, which they've been doing? So last year, they did 21% liability growth, which is what is needed. If you see last 8-9 years, they've been clocking high deposit rate in the industry, gaining market share. So if you can do that, courtesy the branch expansion they have done, in the last few years, a lot of the banks branches are now maturing. And second is how quickly they can, grow the loan book because, apparently on the mortgage book, they had an understanding with HDFC Limited. So I think now they can write more mortgage, which also changes the overall mix of the loan book. I think these are the two things I'll watch out more closely. How can they grow assets and how quickly they can mop up the deposits.
No, sure. Of course, the big question for now remains the synergy benefits that you're expecting on account of the merger. But Gurmeet, your take as far as the asset quality is concerned, we are used to seeing very, very steady numbers from HDFC. I know 0.3 is also a very, very good number for any bank to have. But nonetheless, on the sequential basis, there seems to be an increase in the absolute numbers and thus the ratio as well. Are you worried about that at all?
No, not really. Not really. If you see in terms of amount, that's roughly at about 19 odd thousand crores. So also the balance sheet size is very big. So 0.27 to 0.3 is not something is much of a concern. And they have very healthy provisions as well. And last 20 years, I've just seen the NPA go up by more than 1% just once. I think that was during COVID. Haven't seen that happen for almost 2 decades. I've been tracking the bank.
Okay, so that point is taken, but within the banking space itself, Gurmeet, what's the pecking order now? Would you wait by for, let's say, a couple of quarters before you see what kind of impact comes for HDFC Bank, or do you think right now is the best time to buy it and ride that upside?
No, as I said, valuations are very reasonable. Combined entities, about 2.5 book value, trades at about 15 times EPS. Not seen HDFC. Actually, if you see, it's one standard deviation below. And if you see last 3 year returns, it's in high single digit compared to the peers like ICICI, even Axis. So I think HDFC remains good. Even I think SBI post the Adani episode hasn't really recovered from the highs it made. So I think that those numbers I'll be also very keenly watching out for both operating metrics as well as asset quality.
Okay, Gurmeet, hold that thought. I think we have our colleague Harsh also mic'd up to talk to us about these numbers and other internals that he's picking up. Harsh, your first take?
Well, yes. So first, let me take you through the NII number. That NII number has come in slightly below our expectations. 24,000 crore was the anticipation, around 4.1% NIM. So that NIM seems to have moderated a little bit on the back of that very strong deposit growth that's come through. Of course, we await commentary on what that will mean in terms of the numbers and where the NIM actually stands. But let's quickly take you through operating profit. That's come in slightly above what we were penciling in. So really the interesting part here is OPEX does not seem to have gone up as much as most analysts on the street were expecting. So really catching up with regard to where the OPEX was is where operating profit, there's been a bit of a catch up versus the NII, slight decline there. You're looking at provisions which are well below what our estimates or the numbers that we were working with. 4,000 crore was the number we were working with. It's come in at 2,850 crore. So, of course, it's slightly lower. And you're looking, therefore, at PAT, which has gone and come in much better than what we were penciling in. We were penciling in a PAT of 11,000 odd crore. It's come in at 11,950 crore. So, definitely a much better PAT number, a solid 30% growth on the bottom line by HDFC. Of course, NPA is largely unchanged. There's been a slight spike in the GNPA number. Of course, need to wait and watch as to what that means, but really nothing of concern, at least right off the bat. In terms of the advances and deposit growth, of course, already disclosed, but 19% on the deposit side and 16% on the advances side, just to reiterate that.
Thanks so much for joining us. So it doesn't look like there has been any, data which has been given for the merged entity also at this point of time. We're waiting by for that. But Harsh, we'll let you go on that note. Gurmeet, you as well. Thank you so much for joining us quickly and making sense of the HDFC Bank's numbers. So as Gurmeet put it in a word, steady as always. That's what we expect from HDFC Bank, and that is exactly what they have delivered. On that note, wrapping up this edition of Markets at Noon.